And India grows by a better than expected 8.2% in September quarter, pointing to strong momentum led by manufacturing, construction and a robust services sector. And that despite President Trump's 50% tariffs on Indian exports. However, a day before the GDP release, the International Monetary Fund raised questions on that data. On Thursday, the IMF also tempered expectations around India's $5 trillion target. In its annual review, the international body downgraded India's national accounts data to C grade, the second lowest rating. Well, according to the IMF, that grade means that data available have some shortcomings that somewhat hamper surveillance. The world body, citing the methodology of the calculation of data by the National Statistics Office, lowered its rating from an earlier grade of B. Meanwhile, overall across all data categories, India has received a grade of B. Now, India's latest GDP print is well above the 5.6% recorded a year ago and stronger than the 7.8% in the June quarter. The surge also beat most forecasts, even as the economy faced pressure from US tariffs. A big part of the acceleration came from the secondary and tertiary sectors. Manufacturing expanded 9.1%, construction grew 7.2%, and the broader secondary sector clocked growth of 8.1%. The services side of the economy remained the standout performer. The tertiary sector grew 9.2%. Agriculture, however, lagged behind. The farm sector grew just 3.5%, and utilities such as electricity, gas and water supply grew 4.4%. That reflects a softer patch for these segments. The stronger than expected print reinforces India's position as the world's fastest growing major economy. It also sets an upbeat tone ahead for the financial year, with bets for a US trade deal soon. The IMF said the Indian economy could cross $4 trillion in financial year 2026 and reach about $4.96 trillion by 2028. And this is about $200 billion lower than its earlier view. The international body pointed to softer domestic demand and cooling inflation. India's chief economic advisor, V. Anantha Nageswaran, now expects full-year GDP growth to hit 9% or even higher. This marks a marked upgrade from the 6.3 to 6.8% projection in the economic survey. The Reserve Bank of India has already raised its 2026 forecast to 6.8%, with the exception of further revision in the next week's MPC meeting. Now, the bigger drag is the rupee. The IMF expects the currency to trade at around 87 a dollar in 2026 and by 87.7 in 2027. Now, every step down makes India's dollar GDP look smaller, even if the economy is expanding well in rupee terms. The fund does not see a crisis but expects bouts of depreciation because the global uncertainty, tight financial conditions and trade shocks.